A good time to get on board Mehrbun Irani. He represents the private client group for Nirmal Bang Securities. Mehrbun, good morning. Thank you for joining us. Mehrbun, it's been a great year. It's been a year where only foreign institutional investors have participated and domestic institutional investors, either they've been on the sidelines or they've decided to sell. Do you think for 2013, the big story could be a turnaround or participation by HNIs and by domestic investors?
I think if you're asking me the first part, I think, yes, it's true to say that it was liquidity driven, mainly from the FIs. Will the money continue to come in 2013? My guess is yes. So relatively, we may fall off slightly if China recovers, because India has got its inflows also largely to do with the poor performance from China. That is point one. Point two is I honestly feel there could be some earnings upgrades coming in 2013, and therefore earnings could possibly help the markets perform relatively better as compared to the global markets. So there are reasons to believe that some sort of fundamental improvements will happen. Fundamentals will improve. Corporate performance could improve in 2013, and while the foreign inflows may slightly come off, or I would say relatively come off, mainly because of some other economies starting to do well. As far as the performance from, as far as the inflows from HNIs go and domestic funds go, domestic funds, there is a big question mark, because I believe that the government could come out with a lot of capital market reforms to allow, to possibly encourage investments in mutual funds. As of now, the scenario is not all that good. But as far as HNIs goes, well, reasons to believe that they will come into the market, because like always, retail as well as HNIs like to come into the markets when markets start showing signs of tapering off.
Mehrbun, morning. So what is your sense in terms of what's going to be the leg of the rally for the index from here on? We've seen outperformance from names like an IDFC. JP Associates has put on 85% all of this year. Tata Motors has been a stupendous gainer. Does it seem like it's going to be now a new set of stocks, or will the strength remain in these hands?
Asha, first of all, I would like to state that the immediate concern, if any, is the US fiscal cliff. Next 24 hours will spell it out. And I've always believed politicians are crass-headed, obdurate enough across the world, and America is no exception. But somewhere, if there is an interim solution coming, the correction or the fall will not be that much. And possibly we could, over the next 2 months, see a new high for the market. Maybe 6,200, 6,300. At least we can see if the fiscal cliff is averted. So what to buy in that particular case is your question. I think I would like to go in with high beta stocks. Maybe names like a Bajaj Auto, which I've liked for quite some time, a Tata Motors, an ICICI, are the type of stocks to buy. Relative underperformers like maybe an LIC Housing, or other stocks to possibly look into. And of course, like always, the select mid-caps.
Bajaj Auto or ICICI Bank, Mehrbun, I mean, these are not beta stocks. These are classic blue chip stocks.
Well, if you look at the way the stocks have performed, I think... I remember, Nikunj, about a month and a half ago when I had mentioned Bajaj Auto, I think you had rightly asked me that the scrap has gone up a little bit too much, but I am possibly looking at 2,800 for the stock coming over the next 12 months. So same applies for Tata Motors, which I've said it for quite some years. I've been saying that it's a dark horse. I still say it's a dark horse. So while I would possibly remain away from a Maruti because of sheer valuations right now, I would like to continue to go in for a Tata Motors and Bajaj Auto. And well, these are the type of stocks. Well, if we see a 6,200 and if we see a 5,600 in the same calendar year, well, these stocks also can falter. So I think there will be trading opportunities in this type of stocks. So maybe, so if you're buying a 500 shares or 1,000 shares of Bajaj Auto, I think you can possibly trade around with 400, 500 of them and possibly go on bringing down your cost of holding, which I think most investors would be wanting to do and would have to do in 2013, which according to me could start well if the fiscal cliff is averted. But the end of 2013, because of global macros, may not be all that rosy, though I still say what I had said earlier in my answer to Aisha's question, that we will relatively outperform the global markets, while 2013 on the whole could be a difficult year.
Let's discuss IDFC at length, because IDFC this year is up 89%. It's the best performing stock on the Nifty. Now, what is IDFC? IDFC is a company which is in infra financing. At a time when the investment cycle is yet to pick up, why is IDFC outperforming?
I think it performed very miserably, I think, in the early part of the year. And I think you saw the stock back at levels where I remember virtually everybody on the street was saying that if you've missed out on HDFC, IDFC is the stock to buy. I think we need to accept the fact as one of the better managed companies today in the country. The management, as and when they have appeared on the media, they have been very categorical in what they are stating. And there were no words which they had not spelled out to state that things are not all that good. But as optimism came back into the market post-September, post a change in the finance minister, post the prime minister talking the language which everybody wanted him to hear for the last many years, I think people started looking at IDFC afresh. And while the investment cycle has not kick-started, there is a lot of optimism that things will start to happen. I think I know a lot of people, a lot of HNIs who actually say that if this government has any semblance of hope of coming back to power in 2014, they will have to depend on the economy beginning or coming back on its feet. In short, the investment cycle having to kickstart. If that happens, Nikunj, which is the company which could stand to benefit the most, which should be IDFC, at least in the top 5 of any prudent investor. So people looked at IDFC afresh. I think, yes, you are right. The stock possibly could have gone ahead of fundamentals, could have gone ahead of possibly the economy taking off again. Because I think it's a long way off, personally. I have reasons to be a little bit pessimistic as far as the economy will really kickstart so soon. But at the end of it all, that is the way the market always functions. The market starts discounting optimism, starts discounting things which can end up happening. There is a disappointment sometimes. The stock starts falling off. Whether in IDFC it will happen or not, I don't know. But it is a company which is very well managed. So possibly after the sharp run-up, if the stock comes off 10-15% from here for whatever reason, I think I can possibly say that even myself, I will be looking at IDFC afresh.
Mehrbun, Strides, Wockhardt, it's been a great year for both these stocks.
I think there are a whole lot of stocks, I think, which have been, I would use the word dark horses, and which have really yielded super returns. I think nobody ever imagined that Wockhardt would possibly be at the level at which it is right now, and possibly there are reasons to be positive or optimistic even now, honestly, in case of Wockhardt. As far as Strides go, I think there's a development which is expected to happen. Promoters selling off at a price higher than the market price. Considering the way the stock has run up, is there an opportunity? Honestly, I don't have possibly that type of guts to possibly recommend the stock to my clients or to the elite audience which is watching the show. The Strides, honestly, I'll give it a pass, because at this level, not comfortable. To the fact is, if the promoters sell off at a price higher, we could see higher levels, but not worth a punt, I would say. But Wockhardt, I think a correction in the stock, if it comes, a further correction in the stock, if it comes, I think it could provide a decent fresh opportunity. The story looks very much intact. Despite the sharp run-up in the price, we could possibly see the stock rolling higher in 2013.
So what is the trigger for Wockhardt?
There are a whole lot of developments which have happened, I think, Nikunj. What we are talking about is the fact that, okay, fine, a lot of interested, big people, well-informed investors have got into the stock. That is not the way to look at it. The fact of the case is, if you look back at what had happened to this company, and from where it has come where, I think there are reasons to be positive, I think. And the management is a management which, despite all sorts of criticism at one point of time, have come out pretty clean.
Mehrbun, what's your sense on IT? We've seen a stark underperformance from the bellwether IT names. For instance, Infosys has lost nearly 16% year to date. Is the weakness here to stay, and what is it that we can expect from the January earnings?
I think post-November, I think we saw a sharp fall, or sharp sell-off, I would use the word, in quite a few IT stocks post what Cognizant announced. I think analysts had their own conference calls with quite a few frontline companies. They came up with their calls. I would put it that at present, the frontline IT stocks have become slightly underowned. And even in them, I think Infosys and Wipro are highly underowned as compared to a TCS or an SCL Technologies. If you're asking me, Aisha, I think what is the concern over here is the pricing power. Now, will that come off? I don't think so. I personally belong to the very small minority right now which believes that there is an interesting opportunity for long-term investors in Indian IT companies right now. I think we need to admire, we need to accept the fact that in the midst of a very major global crisis, these companies have come up with fairly decent performance. As far as Infosys goes, I think I remain positive on it for the long term. I again say the same thing which I've been reiterating over the last few months, that a good management always bounces back. Infosys has got its problems. 1 year later, the stock may be at the same price, but 3 years later, possibly, you and I, Aisha, could be discussing the fact that, oh, there was an opportunity in 2012, 2013, and we never took advantage of it.
Merbun, it's been 9 quarters. It's been 9 quarters that Infosys has disappointed. And, ultimately, it's all about stock returns. That's what my, assessment is. Markets are up 27% this year. Infosys is down 13%. HCL Technologies is up by about 35% this year, and Infosys is down, is down by about 15. So look at the difference. I mean, the difference is about 50%.
I think Infosys was the most overowned stock once upon a time, and when things never happened the way analyst community was expecting, I think 2, 3, 4 quarters down the line, people started possibly giving up on the stock. So that's why I used the word under-owned. So what we have seen in Infosys over the last 1 year is funds selling off Infosys and possibly moving into TCS or moving into HCL Technology. And therefore, you see the relative sharp outperformance of TCS and HCL Technologies vis-a-vis and Infosys. Will these problems continue for Infosys and for a stock over the next 4, 5 quarters? Possibly yes, Nikunj. The fact of the case is, should I buy into an Infosys for the next 3 years right now when I can get it at the same price next year? I think if an investor starts thinking that way, he can possibly give Infosys a pass even now. But I'm a strong believer. A stock like an Infosys, a stock like a Lever, a stock like an ITC, when they come down very sharply, and if you don't buy it, I promise you, you won't buy it, even if it remains at lower levels for the next 1, 2, 3 quarters. And when it starts going up, possibly you will start chasing it. I personally feel Infosys possibly now belongs to that particular bracket, which may underperform for at least 1, 2, 3 quarters more. But then the fact is, once you have started keeping it on the side and ignoring it, for all you know, you will ignore it till the time Infosys starts attracting the attention of everybody 3, 4 quarters down the line. You will end up possibly paying a much higher price than what you would end up paying over the next 1 to 3 quarters. It's a stock which you should learn to accumulate, Nikunj, and possibly forget it for the next 2, 3, 4 years.
Merbun, even though Indian markets have got $22 billion this year, the rupee, the currency is down by about 3.5%. If the rupee slips further, do you think it's a matter of time global investors will take notice of it?
Yeah, so the biggest concern, if you ask me, for 2013, according to me, is the rupee, the performance of the rupee. And honestly, if we are looking at some more stimulus happening across the world, and US is definitely going to come up with, they already announced it, I think it could be a little bit of a worry somewhere. I think while the government will possibly do everything possible to try and rein in the deficits, I think the trade deficit is a matter of concern. If the rupee doesn't strengthen, I think, honestly, I'm a little bit worried. So according to me, rupee is the biggest risk factor as far as the Indian factors are concerned. Second is the fiscal deficit. Third is inflation and interest rates. So these three in that order, I would rate it as the reasons to be a little bit concerned about as far as India goes. But on the whole, if you ask me, the factor which will dictate the Indian markets and the global markets are going to be the weakening, worsening macros globally. And because of that only, I feel India as a stock market will outperform the global markets in 2013, despite having its own concerns locally.
So after a 28% run-up this year and a 10% run-up in last 3 months, how does one decide and figure out that all the good news is not baked in and markets are still not priced to perfection? Like I mentioned earlier, Merbun, it's all about expectation management. A year ago, there were no expectations, but now markets are riding on high expectations.
I think, Nikunj, I would look at the performance of 2012, which has honestly surprised everybody and made everybody go wrong. Because if we go back and check out what people were saying, including you and me, I think in 2011 end was 2012 is going to be a difficult year. So in terms of stock market performance, definitely it has come as a very, very major pleasant surprise. But if you look at the performance of the last 2 years, I think things have largely evened out. So having said that, the fact is, valuation-wise, I'm not very uncomfortable. I think it's true, markets normally go up ahead of the events, and if the events don't materialize, if things don't improve, if the economy doesn't get a kickstart again, I think the markets could flounder. But more important and more worrying are the global macros. So I feel that if this US fiscal cliff passes through, nothing happens, nothing negative happens. We could possibly be discussing much higher levels come February, because I think in the next few days you and I will be discussing possibly the easing of the monetary policy in January. Then we'll be talking of a budget coming in February, which many believe will be a work done by the finance minister who has been the most popular with the stock market. And I don't think anything negative should happen for the market, despite the fact that people are saying there could be populist measures ahead of the elections in 2014. So I think the budget possibly will keep the markets pepped up. So January, February could see higher levels. After that, if actually things don't improve, we could possibly look back. Sometime in April, maybe we'll be looking back and saying, oh, the markets had gone up, we should have taken some profits home. So yes, I'm worried for the second half of 2013, but mainly because of global factors, global macros. India, I think, yes, could be going ahead, much ahead of fundamentals, and if fundamentals don't catch up, there could be a little bit of worry.
Mehboob, let me understand your message then. So as a money manager, are you saying that don't sell? If you bought stocks in 2012, write them on. And what is your portfolio strategy at the current level based on the fact that you're sounding bullish?
As of now, I think, again, I'm saying next 2 months, and that's what I was trying to say, the high beta stocks, I was mentioning the names only for the simple reason, those are the type of stocks to possibly buy into. Temporarily, the weightage from defensives could be brought down. But go back into defensives if my prediction, and I could be wrong, I got my own view, and I got a right to go wrong. But if my prediction goes right, if we see higher levels in January, February, I think the time to go back into defensives will come. Because from a level of 6,200, when the markets give you another 10-15% in 2013, I have my grave doubts. So somewhere at higher levels, maybe around the budget time or before the budget time, people will have to learn to take the profits off the high beta stocks and possibly look back at defensives again across sectors, stock specific.